Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And guys, today we had a very choppy day. This is the 15-minute chart, as you guys can see, up, down, between our levels, washing above it, washing below it, giving us false breakouts, false breakdowns. Today we are in the chop we're in the chop phase, guys, after a very big dropped yesterday. One of the greatest trading days I've ever had in my life. A one-directional trend day. What does that lead to? If you guys watched my previous video, or if you guys been trading for a while, you guys notice yourself. Trending days lead to chop days. Chop days lead to trending days. Today, we had a chop day where both bulls and bears got faked out. Okay? Best way to trade the chop, in my opinion, is to scalp, identify your support and resistance levels, and you play it level to level, or you just scalp it. Some people not find that worth doing, but that if you're trading this chop, best thing I can say is try to survive it. Because when the trend days come, you make big money. You can make your year, you make your month, on those trend moves if you can catch it and be on the right side. But these had a chop day. But go to the daily chart, look at the bigger picture, okay? What we need to note, well, I'm noting at least, is this orange trend line, okay? From June low connecting to July 14th low, connecting to September 2nd low. And we had, some washes below on September 6th, September 13th, and also today, September 14th, okay? If I adjust this trend line here and bring it to the September 6th low, it looks like we got a perfect bounce off this trend line today. Okay, so got some buying pressure on this trend line. So, and we're in the chop phase right now. So, very important we identify the range of the chop range. Right now, looking at the 15-minute chart, you can see the range as of right now is around 391 up to 396. We're chopping within that range. I got some levels within that range, 395, 394, and 392-ish, that I'm using as pivot points to enter or scalp, some options or some longs or shorts that I'm doing. But, it's very difficult to trade these chops. So if you ended the day green today, it's very, an awesome feat in my opinion, because it's challenging. You got to be very tactical, okay? Well, always got to be tactical. So pretty much, what I'm looking for is a breakdown of this orange trend line. If you're a bear, okay, if you're bearish like me, we got this trend line since August high, okay. If we are to get that lower low, we gotta break down this trend line, okay. And the trend line level, the breakdown level right now is at 394. For tomorrow, actually is at 392, okay. 392 for tomorrow, based on this trend line. The way I have it here, connecting June low to September 6th low to today's low. Okay, so if it breaks down 392, we lose this trend line. That puts 390 in play, very critical level. Fib levels from January high down to June low, that's the green lines. I have the 23.6 retracement level at 389.97, but I would just keep it even at 390. All right. If 392 fails, if 389.97 fails, or 390 fails, I got this level at 388.76. That's a 61.8 retracement level from June low to August high. Yes, I have a lot of fib levels, okay? But I am favoring, if we can break this trend line, I am favoring the downtrend continuing and giving us a lower low. So I'll be eyeballing or watching the this 384 level, okay? As you can see, I got this wedge pattern, falling wedge, I guess. But the support of it is at 384, 383.8-ish, all right? Below 388.7, I have a resistance around 386-ish. And then below that would be the 384 test support of this falling wedge that I got here, okay? But for those levels to be hit, we need the right trigger. That trigger is losing the 392 level, okay? It defended today. Well, it dropped a little lower, but this trend line defended today. So I can't get too bad. I mean, I'm overall bearish, but short-term bearish because I am a day trader. I got to be unbiased when I day trade. And I'll be looking for puts if 392 fails. Okay. Right now we're in a chop phase, so we could still continue to chop. The top, the high resistance level that I'm looking is based on this fib level, 50% retracement level at 397. And I have a level at 398.6, okay? Because if I start my fib level from August high down to September low, right here, I have a 23.6 retracement level at 398.6 as well. So I'm watching those level, and of course, this level around 401.5ish. That's based on this white trend line. The trend line resistance of the falling wedge that I have. Okay, so we could get a relief rally if 392 can continue to hold. All right, and those are the levels that I'll be targeting. Above 401.5ish could be bullish because that's another breakout of this falling wedge pattern that I got here. Okay, so below 392, let's get bearish. Breakdown of a trend line. Let's hit those targets level to level. No home runs. Let's go for base hits. Okay, if we break another level, we can always just re-enter or add to our runners or add to a winning position. Okay, so below 392, I am bearish. Above 397, I'm bullish. Okay, I do have a level around 395, as I mentioned earlier, and 394ish. We chopped around that range today. Okay, but to trigger more upside, definitely got to recapture 397. All right, anything between 392 and 397 as of right now to me is just chop, and it's just a bunch of noise. So be very careful trading the chop, because market makers will be looking to fake out both bulls and bears. Okay, the least stressful thing to do is just wait for the breakout of the range. Calls above 397, puts below 392, and just ride the next, move down to the next level, and manage your risk properly. Okay, so I'm gonna move on to the triple Q. Triple Q lost that 294 level yesterday. Okay, that's a 61.8 retracement level from June low to August high. So that was a very critical level in my opinion, and we recaptured that level. So triple Q is in false breakdown mode. We'll see how much it can go up higher. Okay, this doesn't mean I'm bullish medium term or anything, but it is a setup for more upside for a relief rally at the very least. Okay, there is some resistance at 296.8ish. If we can clear that, that will put 299ish back in play, then 300.9, then 301.8ish to a 302 zone. Okay, the best time in my opinion to get bearish on triple Q is if the 294 level is lost again. All right, it recaptured today. That is a false breakdown setup, which is bullish, but it's not guaranteed it'll go up. Okay, we gotta be nimble and be ready for any scenario. So if 294 fails again, it's most likely not going to recapture, and that should trigger more downside down to 291, 288ish, and possibly lower. Okay, but as long as 294 holds, possible relief rally can continue up to those upside targets that I mentioned earlier. Okay, Tesla was able to recapture intraday and on the daily chart the 200-day moving average, and it recaptured the 61.8 retracement level that I have here. That's around 296, as well as the yellow trend line. Okay, it went all the way up and hit the 3. I had a target around 304ish. That's my 78.6 retracement level, and it got some rejection there. So for tomorrow, 299 must hold the lowest for Tesla to see more upside. Okay, and possibly test 304 again, and maybe even break it this time. If 299 fails, it could possibly go back down to 296, retest that 200-day moving average. And if that fails, we can drop all the way down to 290. Okay, guys? Those are my levels. Those are the setups. I'm going to end this with the option flow. 70% in the puts. It's pretty bearish. Dark pool, as you can see, it's green. Had some accumulation around 394-ish and 393-ish. And SPY is above those levels, so Cheddar Flow is interpreted as bullish right now, but that's not guaranteed. We got to combine it with our technical analysis, all right? But overall option flow is bearish on the SPY for filter for 500K premiums or above. Triple Q, not too bearish, but it is bearish, 57% in the puts. Oop, that's the dark pool. And we'll go to Tesla, filter for 500K premiums or above, and 60% in the puts for Tesla. So pretty bearish on Tesla as well. But like always, price action is the leading indicator. All right, guys. So thank you guys so much for watching. If you guys are looking for a profitable trading community to be a part of, please consider joining Uncle Charles' Discord. It would mean a lot. Other than that, thank you for watching. Peace.